Everyone's talking about Bitcoin, but have you seen what's happening with Ethereum? Big money players are buying up Ether so aggressively that some are worried there might be none left on exchanges by early next year. We're seeing a massive rotation of capital, with one whale famously selling $500 million in Bitcoin to snap up $2.2 billion worth of Ethereum. On top of that, major financial institutions like BlackRock are piling in, and even countries like Japan are considering adding Bitcoin to their national reserves. This isn't just a small trend, it's a huge shift in the market. While some analysts are still focused on Bitcoin hitting $120,000, these moves suggest the smart money is getting ready for something big in the altcoin space. In the latest video from Altcoin Daily, the host discusses the major interest Wall Street is taking in Ethereum. BlackRock has been buying a ton of Ethereum, accumulating over 2.26 million ETH since May. Their Bitcoin ETF has already surpassed the Bitcoin holdings of Coinbase and Binance combined, and it looks like their Ethereum ETF could be next. The video also features a clip of rap artist Big Sean telling his audience to invest in Bitcoin, Ethereum, and Ripple. VanEck CEO calls Ethereum the Wall Street token, explaining that financial institutions will build on its blockchain. The host also talks about Tom Lee's bullish predictions for Ethereum, expecting it to hit $5,500 in the next couple of weeks, and potentially $10,000 to $12,000 by the end of the year. The video points out that corporate treasuries now hold over 3.3 million ETH, worth about $14.5 billion, which is 2.75% of all Ethereum in existence. Finally, there's a mention of Donald Trump's media company raising money to invest in Crypto.com's Crow token. The video from Altcoin Daily paints a very optimistic picture for Ethereum, and a lot of the points are backed by current market trends. The emphasis on BlackRock's accumulation is significant. Recent data shows their Ethereum ETF, ETHA, pulling in massive inflows, with one day seeing over $325 million. This institutional buying pressure is real and is happening even as the price of ETH hovers around $4,500. Tom Lee's prediction of $10,000 to $12,000 by year-end seems ambitious, but his shorter-term target of $5,500 is more plausible, especially with the strong institutional support. The current crypto market sentiment is somewhat neutral, which could mean there's room for growth if a strong narrative, like institutional adoption, takes hold. The regulatory landscape in the U.S. is also becoming clearer with the passage of the Genius Act for stablecoins, which could indirectly boost confidence in established blockchains like Ethereum. While celebrity endorsements like Big Sean's can create short-term hype, they can also be a sign of market froth. The more sustainable trend to watch is the steady flow of institutional money and the development of the crypto market structure, which seems to be what's really driving the current interest in Ethereum. In the latest video from the Crypto Rover channel, the host details his $10 million long position on Bitcoin, explaining that the market has perfectly followed his prediction of a liquidity grab on the lower side. He now anticipates a significant move up to sweep the topside liquidity, targeting $120,000. He plans to take profits along the way, closing 25% of his position at $116,000 to account for a CME futures gap and another 25% at the $120,000 liquidity zone. He believes Bitcoin is confirming a breakout that supports this upward continuation and suggests the ultimate bull market peak could be around $137,000. The host also touches on Ethereum, noting it's forming a symmetrical triangle and looks ready for a breakout. He suspects that capital will soon rotate from Ethereum into promising altcoins like Chainlink. The video's bullish outlook on Bitcoin reaching $120,000 is ambitious, but aligns with some broader market forecasts for late 2025. Currently, Bitcoin is trading around $113,127 after a recent dip, showing some consolidation. The idea of a liquidity sweep is a common technical narrative, but achieving such a high target depends heavily on sustained institutional interest. On that front, while spot Bitcoin ETFs saw inflows of $81.25 million on August 27th, the real story has been the massive inflows into Ethereum ETFs, which have consistently outpaced Bitcoins for over a week. Ethereum funds pulled in over $307 million on the same day and have attracted roughly $3.7 billion in August, while Bitcoin funds have seen net outflows for the month. This trend supports the video's theory of a capital rotation. Ethereum is currently trading around $4,571, and its strong performance relative to Bitcoin has many analysts talking. The influx of institutional money into Ethereum, potentially spurred by recent regulatory clarity like the Genius Act, could indeed fuel a broader altcoin rally as predicted. However, the overall crypto market sentiment is cautious, with the fear and greed index in the neutral zone, suggesting traders are not overly euphoric despite the positive ETF flows for Ether. In the latest video from the Crypto Tips channel, the host connects several economic red flags in the US to a bullish outlook for crypto, especially Ethereum. He points out that the US Treasury is buying back its own debt, a process known as debt monetization, which signals a weakening dollar. This is paired with record-high housing unaffordability and signs that middle-class consumer spending is dropping. The speaker argues that these are classic signs of serious inflation that politicians are ignoring. He also notes the U.S. money supply is growing again after a brief pause. Shifting to crypto, he mentions a prediction from Tom Lee that Ethereum could hit $5,500 in the near future and potentially $10,000 to $12,000 by the end of the year. The main event is a massive whale transaction. A single entity sold over $500 million in Bitcoin to buy $2.2 billion worth of Ethereum. The host sees this huge move as a clear signal that altcoin season has begun and advises viewers to be patient as the market develops. The rotation from Bitcoin to Ethereum described in the video isn't just a one-off event, it's becoming a noticeable trend. Recently, Ethereum ETFs have seen inflows dramatically outpace Bitcoin ETFs, with one report noting $1.83 billion flowing into ETH products versus just $171 million for Bitcoin over a single week. This reflects a broader shift in institutional interest. Right now, Ethereum is trading around $4,520, while Bitcoin is hovering near $113,100. The video's point about a weakening U.S. economy as a driver for crypto is a long-standing narrative, and current data adds some weight to it. The annual inflation rate for July was 2.7%, and while that's not runaway inflation, it remains above the Fed's target. More importantly, the U.S. national debt has surpassed $37 trillion, with interest payments alone costing over $1 trillion this fiscal year, exceeding spending on defense. This level of government debt and the debt monetization the video mentions could indeed push more investors toward assets like crypto. The whale's massive purchase of over 96,000 ETH is a strong vote of confidence and aligns with a market sentiment that seems to be favoring Ethereum for greater upside potential in the near term. In the latest video from Lark Davis, the big news is that Japan is in early talks to create a strategic Bitcoin reserve, following the lead of other nations like the Philippines and Brazil. This is happening as Japan also considers Bitcoin ETFs and friendlier crypto tax laws. Lark mentions the U.S. Treasury continues its bond buyback program, which adds liquidity to the markets. He shares his personal trades, including a Bitcoin long position, with a target of $120,000 and a larger swing trade on Solana, aiming for new highs. The video also touches on Tom Lee's incredibly bullish call for Ethereum to eventually hit $60,000. A major event on the horizon is the expiration of $5 billion in Ethereum options, which could push ETH toward the $5,000 mark. However, there's also over 1 million ETH in the queue to be unstaked, which might create some selling pressure over the next month. For other coins, XRP is forming a triangle pattern that could lead to a breakout rally towards $4. Solana has broken out of its pattern with a technical target of $255. Finally, he discusses Jupiter, JUP, launching a new money market on Solana and Pengu, holding key support levels for a potential future move. The discussion around Japan potentially creating a strategic Bitcoin reserve is significant and aligns with a broader trend of national and corporate adoption. Recently, political leaders in Japan have been seriously discussing the idea, including proposals for major crypto tax reforms that could lower capital gains tax from as high as 55% to a flat 20%. This isn't just talk. Japanese companies like Metaplanet are already acting, having added thousands of Bitcoin to their balance sheets this year alone. This move by the world's fourth largest economy could create a domino effect. In the latest video from Ben Cowan, he offers some dubious speculation on where Bitcoin might be heading in the near future. He points out that Bitcoin is currently in a downtrend, likely making its way to the bull market support band, which is a key zone made up of the 20-week SMA and the 21-week EMA. Cowan thinks Bitcoin will probably find a local bottom sometime in September, though it could stretch into early October. Ben Cowan's technical forecast lines up with a market that feels like it's holding its breath. Currently, Bitcoin is trading around $113,000, which is a bit of a no man's land between its recent all-time high of over $124,000 and the key support levels he mentioned. The 20-week SMA is sitting around $103,000, making it the first major test if the downtrend continues. His more bearish scenario of a drop to the 50-week SMA, currently around $91,500, would represent a significant pullback from current prices. In the latest video from Coin Bureau, Nick breaks down the world of digital asset treasury companies, or DATs. These are firms that are raising billions to add cryptocurrencies like Bitcoin, Ethereum, and even Solana to their balance sheets. The video explains that companies do this to fight inflation and boost their stock value, following the path of MicroStrategy, now known as Strategy. It turns out there are now 152 Bitcoin treasury companies holding almost 1 million Bitcoin. Strategy is the biggest, with nearly 630,000 Bitcoin, and they've raised tens of billions to make it happen. Interestingly, major players like Vanguard and BlackRock are top shareholders in these crypto-heavy companies. The trend isn't just about Bitcoin. 71 companies are now stockpiling Ethereum, holding over 3.7 million ETH collectively. Bitmain leads this pack with about 1.5 million ETH. Solana is also getting attention, with at least 7 companies holding just under 4 million SOL. The video also touches on companies starting to accumulate XRP, BNB, and even Dogecoin. A key point is that many of these DATs are funded by crypto institutions, but their shares are often held by traditional finance giants. This could be a way for investors to get exposure to altcoins without directly buying them, similar to how Strategy stock was seen as a stand-in for a Bitcoin ETF before they were officially approved. The growth of digital asset treasury companies is a significant indicator of crypto's increasing integration into mainstream finance. The video's point about these companies acting as quasi-ETFs for altcoins is particularly sharp, especially as regulatory frameworks are still evolving. Looking at the current market, Bitcoin is trading around $112,690, while Ethereum is holding near $4,573. Solana has seen a notable climb, trading at about $212.94, with its DeFi total value locked reaching its highest point since January 2025. This suggests strong ecosystem growth and user trust. The influx of institutional capital is undeniable, with Bitcoin ETFs attracting significant inflows and the total crypto market cap hovering just under $4 trillion. Even though some analysts believe we are in the later stages of the current bullish trend, the sustained institutional demand is a new factor that could alter traditional market cycles. What's fascinating is the somewhat hypocritical stance of firms like Vanguard, which publicly expresses skepticism about crypto's intrinsic value, yet is a major shareholder in crypto-accumulating companies like Strategy and Mara Holdings. This indirect exposure allows them to capitalize on the upside while maintaining a publicly cautious position. The trend of Ethereum-related funds outperforming Bitcoin funds and recent inflows also points to a broadening institutional interest beyond just Bitcoin. This movement of capital into a wider range of digital assets through corporate treasuries could indeed be the rocket fuel the video suggests, potentially leading to significant price movements as more companies adopt this strategy. In the latest video from Crypto's Russ, the host discusses Nvidia's strange stock performance after a fantastic earnings report. Even though Nvidia's revenue and growth numbers were incredible, the stock dropped after hours. This seems to be because of worries about future sales to China, as they sold 0h20 chips their last quarter. The host thinks this is a silly overreaction from Wall Street, especially since the company's performance was so strong even without the China sales. This dip in Nvidia briefly cooled off the crypto market, though Bitcoin didn't move much. The bigger story is the growing institutional adoption of crypto. Solana, SOL, is gaining a lot of steam, with institutions holding billions and Pantera Capital planning to raise $1.25 billion for a Solana treasury. The host also points out the massive accumulation by companies like MicroStrategy which holds over 3% of Bitcoin's supply, and BlackRock, whose Bitcoin ETF holds even more. BlackRock is also rapidly buying up Ethereum, with its ETH holdings now ranking third and closing in on Coinbase's reserves. This institutional buying spree is presented as a sign of the market's underlying strength, suggesting current price dips are temporary. The reaction to Nvidia's earnings is a classic case of the market selling the news, even when the news is overwhelmingly positive. The fixation on the uncertainty of China sales overlooks the company's staggering 50% plus year-over-year growth in a tough economic climate. The short-term thinking in the stock market contrasts sharply with the long-term strategic moves we're seeing in crypto. While the video mentions Bitcoin hovering around $111,000, its current price is slightly higher at about $113,102. Ethereum is trading around $4,520 and Solana is near $209, both very close to the levels mentioned, showing continued stability and strength. The real story here is the relentless institutional march into digital assets. Pantera Capital's plan to raise $1.25 billion for a Solana treasury is a massive vote of confidence. More impressively, BlackRock's iShares Bitcoin Trust, IBIT, now holds over 745,000 Bitcoin, surpassing the reserves of major exchanges like Coinbase and Binance. At the same time, their Ethereum ETF has seen inflows of $1.83 billion in a single week, outpacing Bitcoin ETFs by a factor of 10 and signaling a huge shift in investor focus. This isn't just dipping a toe in the water, it's a structural shift where regulated investment vehicles are becoming the preferred method for institutional exposure, draining liquidity from exchanges and setting the stage for what could be a very interesting market dynamic moving forward. In the latest video from DataDash, host Paul Sampson breaks down the market's wild reaction to Nvidia's recent earnings report. Even though Nvidia posted strong numbers, the stock took a surprising 6% dive right after the announcement. Paul suggests this was likely a move to shake out traders who had placed long bets expecting a pop. Looking at the bigger picture, he sees Nvidia as still being near its all-time highs. For anyone looking to get in, he's waiting for a potential pullback to a strong support area around $135 to $140. He thinks the stock might push up to the $200 level first before making a healthier correction. At the same time Nvidia's news dropped, Bitcoin saw a massive wick down, but was quickly bought back up. Paul connects this to a bearish pattern that has now hit all its targets, signaling a potential bottoming process. While he still believes Bitcoin is heading for a new all-time high in the coming weeks, he's watching for a possible dip to the $106,000 to $107,000 support zone before the next major rally. His long-term target for Bitcoin remains in the $130,000 to $140,000 range. The video's analysis of a shakeout in both Nvidia and Bitcoin seems quite timely. Nvidia shares did indeed dip after their earnings report, despite beating revenue expectations, and are currently trading around the $179 mark. This lends weight to the idea that the market had already priced in stellar results, leading to a sell the news event. The correlation between major tech stocks and Bitcoin is also a hot topic, though some data suggests this link is weakening as the crypto market matures. Bitcoin is currently trading around $112,000, which is above the $106,000 to $107,000 support level mentioned in the video. The market sentiment is currently neutral, with the crypto fear and greed index sitting at 45, suggesting a level of caution among investors. Interestingly, while Bitcoin ETFs have seen steady inflows, Ethereum-based funds have recently attracted significantly more capital, hinting at a possible shift in institutional focus. With the overall crypto market cap hovering just under $4 trillion in continued institutional adoption, the long-term bullish case presented in the video aligns with broader market trends, even if short-term volatility remains a key factor. In the latest video from Crypto Wendy, she points out some big moves for XRP that seem to be missed by many on social media. A huge milestone was just hit with XRP futures on the CME, reaching $1 billion in open interest in just over 3 months, the fastest any crypto contract has ever done that. This involved 251,000 contracts worth a massive $9 billion. She notes that while spot ETFs for XRP are delayed until late 2025, this futures activity suggests a flood of interest is waiting. On the adoption front, A Chinese supply chain finance company called Linkleges is now using the XRPL for its operations, with plans to tokenize real-world assets like invoices. Additionally, Avalabs has launched a platform called Horizon for Institutions, which will use Arla's Ethereum and the XRPL. This move shows how Ripple's technology is being integrated into the broader DeFi world. The points raised in the video about institutional interest are timely, especially when you look at the current market. As of today, XRP is trading around $2.98, showing some volatility but holding its ground. What's really interesting is that this is all happening right after the long-running lawsuit with the SEC has officially concluded. With both Ripple and the SEC agreeing to dismiss their appeals, the ruling that XRP is not a security in secondary sales is now final, though Ripple still has a $125 million fine for institutional sales. In the latest video from The Modern Investor, the host discusses a significant shift in the cryptocurrency market where several companies, including former Bitcoin mining firms, are now aggressively accumulating Ethereum. A company called Bitmine has rapidly become the largest public holder of Ether, increasing its holdings by $2 billion in just 1 week to a total of $4.96 billion, which is over 1.15 million ETH. These companies aren't just buying. They're announcing goals to own large percentages, like 5%, of the entire circulating supply of Ether. This aggressive corporate buying spree is causing concern that there might be no Ether left on exchanges by early next year. The video also touches on how South Korean retail investors are selling off traditional tech stocks like Tesla to buy shares in these Ethereum holding companies. In contrast, MicroStrategy's recent Bitcoin purchase of 155 Bitcoin was unusually small for them, sparking questions about their current strategy. The trend of corporate accumulation of Ethereum discussed in the video is not just continuing, it's accelerating. Bitmine Immersion Technologies recently expanded its ETH holdings to 1.71 million, valued at nearly $8 billion. This aggressive buying is happening alongside a broader institutional shift. VanEck CEO recently labeled Ethereum as the Wall Street token, predicting it will be the blockchain of choice for banks adopting stablecoins. This sentiment is materializing in capital flows, with corporate treasuries acquiring over $6 billion in ETH in the last month alone, and Ether ETFs attracting nearly $10 billion in inflows since July. With Ethereum currently trading around $4,500, this institutional demand is creating a noticeable supply squeeze. At the same time, we're seeing major players like BlackRock rapidly increase their crypto holdings, with their Bitcoin ETF now holding over 745,000 Bitcoin and their Ethereum ETF accumulating 3.6 million ETH, quickly catching up to major exchanges. The video's mention of MicroStrategy's small purchase is also timely. While they did make a couple of smaller buys, they followed up with a much larger acquisition of 3,081 Bitcoin for about $357 million. This all points to a market where large, institutional players are becoming dominant holders, potentially leaving fewer opportunities for retail participants and significantly altering the supply and demand dynamics for major cryptocurrencies.